You know what's crazy? A lot of Canadians work incredibly hard their entire lives and still struggle financially. It's because nobody really teaches us how money actually works. Growing up, most of us probably heard the exact same formula. So go to school, get a job, save your money, play it safe, and hopefully retire one day. But a lot of people unfortunately miss that inflation has gone significantly up. We're playing a completely different game than the people who have raised us. But the older I get, the more I realize that simply saving money alone usually isn't enough anymore. Because while some people are leaving their money sitting in a regular savings account, earning almost nothing, other people are quietly investing, compounding their money, and building wealth over time. And the difference between those two paths become massive years later. Now, don't get me wrong. Saving money, it is important. Everyone should save or have a savings. But one thing a lot of people don't realize is that if you're letting your money just sit in a regular savings account while inflation keeps rising, your money is slowly losing purchasing power over time. So even though your bank balance may technically be going up a little, the actual value of your money is actually trending down. That's one of the biggest financial traps people typically fall into. A lot of people do think that they're being responsible because they are saving, which is good, absolutely nothing wrong with that. But financially successful people usually don't stop at saving. They ultimately transition into investing because investing gives your money the opportunity to actually grow instead of staying stagnant. And over 10, 20, or even 30 years, that difference can completely change someone's financial future. One of the most powerful things in investing isn't even picking the perfect stock. It's time. Time is what allows compounding growth to really work. And compound growth is basically when your investments start generating gains. Those gains start generating more gains and more gains over time. That's why people who start investing earlier usually end up way ahead financially later in life. Even small, consistent investments over long periods of time can become surprisingly large. And one of the biggest mistakes people make is waiting too long to start. A lot of people say, I'll invest when I make more money. But honestly, starting early is often more important than starting big because consistency compounds, not perfection. And this is where the TFSA becomes really powerful for Canadians. A lot of people hear tax-free savings account and think it's just a place to hold cash. But it's actually more than just that. Inside a TFSA, you can invest in stocks, ETFs or exchange traded funds, dividend investments, REITs or real estate investment trusts, mutual funds, guaranteed investment certificates, which is GICs, and many more. And the major advantage is that growth inside the account is generally tax-free. So if your investments grow over time, you're able to keep more of those gains. And that is a huge factor, especially when you're thinking long-term. Imagine investing consistently for decades while your investments continue compounding without taxes constantly reducing the growth. That's why understanding the TFSA can completely change someone's financial future over time. If you want to learn more about the TFSA in a separate video, I'll put the link in the description below. And honestly, I think one of the biggest reasons many people struggle financially is because they stay stuck in survival mode for way too long. Most people are focused only on paying bills, surviving paycheck to paycheck, consuming more than they invest, and relying entirely only on active income, meaning using your time for money. But financial future usually isn't built through one lucky moment. It's usually built slowly through consistency, discipline, patience, long-term thinking, and strategic investing over time. So once you understand this framework, it's going to be embedded into your mind so you start to make active investment choices for your future. So at the end of the day, building wealth usually isn't about looking flashy online. It's about making smart decisions consistently for a long period of time. That's why you have to position yourself to learn about investing, compound growth, tax-free investing, financial literacy, and long-term wealth building. All of these can change the trajectory of someone's life financially. So understand this, the goal isn't to get rich overnight. The goal is building freedom gradually over time. So if you enjoyed this video, make sure to like, subscribe, and continue investing in your own future because the financial decisions you make today can completely change your future tomorrow.